AICPA Town Hall, a high-impact news broadcast to help you navigate the most pressing issues facing the profession. Get timely and critical information, real-time interpretation, and analysis. Learn strategies, best practices, and capabilities to drive long-term success for your clients and organization. Thursdays at 3 p.m. Eastern Time.
Good afternoon and welcome to the AICPA Town Hall series. I'm Eric Auskerson, one of your hosts for today. I hope you all had a wonderful 4th of July. It's great to be back with you. So what we'll be covering today is we're going to bring you some of the latest information from Washington, D.C., provide you some technical updates, but we're also going to stretch some of your thinking related to your practice and pricing strategies with Ron Baker. So this is what the town hall is all about, interpreting the latest information and also helping firms and members in business and industry advance their capabilities and strategies. So this is the agenda. As I just noted, we're going to have Ron Baker join us for a section talking about the subscription model, pricing strategies, firm strategies. But we're going to be opening up today with two people that you know very well. Mark Peterson, who leads the advocacy area for the AICPA, and Lisa Simpson, who leads firm services. So Mark and Lisa, it's great to be with you. Hope you had a good 4th of July. And
wonderful.
Mark, there's plenty going on, always fireworks going on in DC. So last time we were together, we were talking about a lot of these items, but it looks like some things may be coming together.
Yeah, no, interesting dynamics going on. Reconciliation, we've been talking about the possibility of this major tax package moving forward. As we've said, it has shrunk as the conversation has continued and as we've gotten closer to the election. And the election is a massive inflection point because it impacts the subcurrents going on. So I'm going to try and take what's very complex and boil it down here, Eric. But basically, and I'll get into some of the details that we think are still left in the reconciliation package, the tax bill. But just to remind everybody, what that means if they utilize reconciliation is that the current Democrat majority only needs 50 votes and then a tiebreaker by the president. So it is a partisan exercise. The Democrats are in control of that. They're in control of the White House and they have their 50 votes. If the shoe was on the other foot, the Republicans would be doing the same thing. So these are not partisan comments. This is just what you do if you're in the majority and you have an opportunity, or if you're in the minority, like Leader McConnell, who is leveraging every opportunity he has. So one of those opportunities is unrelated to reconciliation, but still a very important bill. AICPA, it's called, which is really the U.S. Innovation and Competition Package, which is all about strategic supply line issues and China. Bipartisan, a lot of support there, about $52 billion going in to support semiconductors and other strategic industries and businesses. Bicameral House and Senate support. So basically what Leader McConnell has done because of his role of trying to leverage everything he can going into the election is to say, well, if in fact the Democrat majority moves forward with reconciliation, if they get a deal, we will not provide the votes you need in order to get the China competition bill done. And it's a very interesting, complex brinksmanship there because there are some vulnerable Democrats going into what's going to be a headwind for the Democrats in the midterms. There are some provisions in the AICPA bill or the China competition bill they'd prefer over reconciliation. So a couple dynamics going on there. I think the other thing to think about is in terms of the fact that this threat or challenge was made means that reconciliation is getting legs. It's becoming more and more possible. The funny thing about Washington and Congress is it either moves really slow or really fast. And so they could come back after the August recess in September and get something done going into the election. Everything revolves around the election. If you're the endangered Democrats, you want to come back. If you're the Republicans, you see more opportunity on the other side of the election where you may have control of of both the House or the Senate or at least one body. So lots of dynamics.
Well, Mark, we got some questions coming in already, but first, Lisa, welcome to you as well.
Thank you. Good to be here.
Hey, Lisa.
Mark, a question on reconciliation. There's a timeline deadline, right?
Right. So because it is attached to the government's fiscal year, they got to get it done by the end of September.
Okay.
And they really only get so many shots. And there are parliamentary machinations that go into it, which means they have instructions that really design how it can be put together. And so lots of limitations. It also can't have non-budgetary issues in it. For example, there was a push to kind of deal with some immigration issues. Parliamentarian threw that out because it has to be debt or deficit.
Well, Mark, other questions coming in before we move to the next slide. I mean, the last time I was with everyone on the town hall, we were in Vegas talking about the state of inflation with Barry and others. So right now, inflation is, people are asking, why are we talking about, increasing any spending based on the state of inflation?
Well, and I think that's been a major drag on this reconciliation or tax package. So that has been one of the arguments and one of the challenges. Again, the Democrat majority just has to hold, and two senators, Sinema from Arizona and Senator Manchin from West Virginia, have raised those concerns: spending, inflation, state of the economy. Having said that, there are also some very popular provisions that I'll mention that are in the bill. So, I mentioned popular provisions. One of the things that there are in the bill, and this is what's going to get talked about first, it's not going to be the unpopular issues like, corporate tax raisers or some of the energy provisions. It's going to be about addressing some of the expiring subsidies related to the AICPA. There's a lot of pressure on the Democrat majority in order to extend those expiring provisions, which are going to increase expense on healthcare, and also to reduce the cost of drug prices. That's something that could be included by basically allowing the drug companies to negotiate directly versus having to go through the current regime. Both of those are very popular. And if I was running for re-election and I was worried about getting re-elected, I'd want that done before the election. The other one, which, they've got to get the money from somewhere, is corporate tax raisers. So we've talked about this in the past. There's a challenging element for the profession here because what they're focused on is utilizing book income. So obviously you've got taxable income, which where corporations are taxed at now, but then you've got what's reported in the financial statement, which has created some stress. Some, companies report zero taxable income, but yet their financial statements look very different. This is a big revenue raiser, but it puts a lot of pressure on the financial statement, which we believe is a challenge. Financial statement isn't designed in order to, calculate your taxes. And then the energy and climate provisions, there is controversy within the Democrat majority when you think, again, energy states like West Virginia. And what's going to be the impact of those energy provisions? Some, very popular, expiring renewable credits and things like that. So swirling together, you've got a package that's got they all kind of look like this, Lisa and Eric. There's some good stuff and some bad stuff. You're going to hear a lot of talk about the good stuff and not much about the bad stuff or the political provisions until we get closer to the potential of adoption.
Do you think something could still happen before the August break?
I do. They just have to hold. The Democrats just have to hold their majority. The Democrats' House majority is enough. They'll have to eat some things they don't like. They wanted bigger. They wanted more. But if they can hold those 50 senators, they could get something done. Now, as I mentioned up front, the challenge of stripping votes from the China competition bill, as trying to leverage this, could pull some votes from endangered Democrats that would prefer that bill to this one. And again, these bipartisan bills, I've got some other examples. It's a matter of timing. That China competition bill is popular, and even after the election, if the Republicans take over, it's likely it will have enough votes. So for several of these major issues, it's not if, it's just when.
Right. So those bills that McConnell's potentially holding up is just a when, and the reconciliation is still in the if category.
Absolutely. And some of those that we're going to be tracking and we'll definitely be reporting in upcoming town halls. And Lisa's team is going to be in the middle of this, picking through them. Major bipartisan packages. There's a retirement package that has been rolled out. Expanding catch-up opportunities, auto enrollment, some savings credits and things like that. Bipartisan. That's probably not going to happen before the election. It could, but if you think about the dynamics I just mentioned, even though it's popular, it puts a headwind in front of it. And then two others that are out there: data privacy, which will impact business, creating a national framework, reporting requirements, enhanced enforcement, something that will have an impact on practices and their clients. And then crypto regulation. It's been kind of the Wild West, as you know, Eric, out there on crypto. And really, the idea of the package that's been put out is to treat crypto as a commodity. So that gives it a definition of what it is. And then it could be regulated by the CFTC. What are the reporting requirements that may go around it? And then tax implications, right? What are the tax implications as they move forward? So those are three kind of general packages. Bipartisan support, I think before the election, probably not. Retirement, maybe. But within the next couple of years, yes. And there's going to be a lot in there for us to pick through and to share with the town hall community.
So, Mark, in terms of what CPAs should be doing now, if this passes in a lame duck, that's not going to give them a whole lot of time to get up on the provisions and start doing planning. Is there anything they can do now? Or do we just wait to see what passes in a lame duck session?
I think what we do is we're going to get a sense as we get past August, right? You get past August, and then there's this very limited amount of time before they leave for the election. They're going to figure out whether or not they need a lame duck. I suspect they will. They'll probably do temporary funding to get through the end of the fiscal and then get into lame duck. What can happen in lame duck totally depends on what a new majority looks like, whether you want to just get some work done or whether you want to wait until you're sworn in January if you just got gavels. So I think for now it's a hold, but we're going to have a really good sense, particularly on retirement. And I think we can bring back more details and then give a better sense of timing and direction around that as we go forward.
Okay. So stay tuned.
Stay tuned.
Well, Mark, what we'll do is we'll pivot offshore. I know you've got one of your advocacy leaders in the UK, so we bring breaking news. So why don't you talk a little bit about, what this means, in particular, to the profession?
No, politics is interesting everywhere. So Prime Minister Boris Johnson just announced his resignation. This has been brewing. He's had a lot of his own controversies going on. But on top of the controversies are dealing with the rate of inflation, where the economy is in the UK, all kind of came together. He had over 50 members of his own cabinet, this is within his own party, announce their resignations. And those that didn't resign called for him to resign. And so basically he's walking away from the podium saying that he will serve out until he can be replaced, but his intention is to resign. Now, there's some pressure that maybe that's not going to work, having him still there while he's basically in a lame duck situation. We have, the audit. On the audit side, there's been, for several years now, there's been significant focus on audit reforms in the UK, EU as well, but talking about the UK right now. And so that this is something that will impact those audit reforms. Which are a big deal for obviously the largest firms, but even the global networks and even smaller firms get touched by some of these types of things. So the secretary that's responsible for the committee that has the oversight did not resign. So hopefully there's some continuity there. But everything hits pause until this settles down. And we'll be watching for the impact on this. Sustainability is another one. Privacy and global tax are a couple other things we'll be watching to see how it kind of comes out on the other end.
And Mark, just for the audience here, I mean, your advocacy efforts in Europe and around the world have increased over the past few years.
Oh, no, absolutely. We've got, the ability to have a voice on the public accounting side and on the management accounting side with the credibility that we have has really been significant. It's positioned us well in order to have the ability to have our voices heard as policymakers work through things. And just like going through what we did with PPP here with the town hall, we spent a lot of time putting together positions for other governments, UK being one, about our ideas for recovery. What are the things that could be helpful? And taking lessons learned from one jurisdiction like the US over to the UK or the EU, or we actually had done some work in Malaysia and South Africa as well to talk about things that we think help in recovery and some of the lessons we learned with how quickly PPP got put up here and how effectively it got out to businesses, and then the role of the profession in the middle of that.
Yeah, without a doubt. I mean, you see that the lessons learned, and in some cases, the U.S. is leading on some areas, and the U.K., Europe looks to kind of follow them, and vice versa. So, well, thanks, Mark, for the update now, and now we're going to move into another hot topic. A lot of questions came in just on the politics of what's going on in D.C., but let's now move into the IRS.
Yeah, let's move back onshore and talk about one of our least favorite topics, which is the IRS backlog. A couple of weeks ago on the town hall, the IRS had just released an update on their backlog inventory. And then the next day, Aaron Collins, the National Taxpayer Advocate, released a report as well. There were some differences in the numbers, some confusion over where some of the stats were coming from. But the gist of it is we are still dealing with a very substantial IRS backlog. And Mark, I know your team in DC has been pushing really hard.
No, this is, we just want everybody to know we're still on it. There is no magic bullet. We know we've got an uphill battle. I think your point that literally, I think it was the day after the IRS made their statement that everything was stay calm, everything is fine. Aaron Collins came out and said, no, it's not. And so, it may, people are trying, the IRS is trying, they've implemented some mitigations, but we're not going to take our eye off this because, before you know it, we're going to be back in a new tax season. And we need to have clear visibility, transparency into what the status is of the backlog and the ability to answer questions for clients.
So to that point, we've got some topics that we've been kind of digging into with the IRS and, trying to raise awareness around some of the opportunities that we might have to actually get some things moving. But we've got some significant dates that are going to be coming into play. You've got the September 15 and October 15 and other filing deadlines that are coming in before the end of the year. So the question is, is the IRS kind of factoring in an influx of returns as they're trying to get to that healthy level of backlog by the end of the year?
Well, it's like digging a hole and having the sand come in, right? It just as you're digging out, it keeps coming in. And we also have, which I think is going to be interesting to play out. The Commissioner Rettig's term is expiring here in November, Lisa, and obviously there's been a lot of focus and criticism of the IRS. The backlog, a historic number of oversight hearings during the middle of tax seasons, lots of focus on him. But interestingly, again, things go back to elections in Washington. There may be some interest by the current majority in order to reappoint him because then they're in control of the reappointment. It could easily slip. Oftentimes we get serving commissioners until the new majority has control and then can go through the confirmation process. But there is definitely an interest, whether it lands or not, in a reappointment of Commissioner Rettig, even with all of the concerns about the IRS and the leadership. Having said that, literally just today, the relevant subcommittee chair in the House Ways and Means Committee came out furious related to several of the audits that have been called for former FBI officials. So it's still hot in the kitchen for the commissioner.
Yeah, it is. So we've come up with some ways, some both short-term and long-term recommendations that we think could help kind of control some of the chaos and maybe stop some of the notices that are coming out. So in terms of the short-term recommendations, we've been urging for quite some time that the IRS focus on turning off the machine that generates notices. And is there an opportunity for a special first-time abate action that the IRS could do themselves, given the fact that the last 2.5 years have been such unusual circumstances with the pandemic and all of the ERC filings and just everything that's rolled up in the last couple of years. So can the IRS do something proactively to negate some of those penalties that they think might be out there? So we're going to continue to advocate for that and push the IRS to think a little differently about how they've been operating just to control that notice machine. Another key area that I hate to even bring up again because it's pouring salt into a wound, but that whole K2, K3 issue that arose earlier in the year. We're working really hard. We met with the IRS lead around the K2, K3 issue just a couple of weeks ago, stressing the need to fill some of those gaps in the guidance that were generated back in January and February, March around who has to file. And is there a way to narrow for 2023 who might have to file those forms? So our team is working really hard on that particular topic as well.
They are, and you know, the search team and the hiring is we'll start to see whether the process of bringing back these search teams and getting focused on backlog, if we start to see the numbers shift. And the other thing they called for was the permanent hiring of about 15,000 more employees. I think last number I saw was that they had onboarded about 1,500. So 15,000 have 1,500, but they're dealing with the same things that everybody's dealing with regarding finding help. And Lisa, and we've talked about this in the past, we want to be a partner with the IRS. We want to provide workable solutions so that they function. These have been phenomenally challenging circumstances for them. And we're going to stick up for the membership. We're going to push for effective and efficient agency, but we also understand what they're going through. And we do things like try and provide real solutions.
And all of that plays into the long-term recommendations that we've been advocating for quite some time.
They do. You know, the Taxpayer First Act, which is, you know, something that we were supportive of, really looks at structural changes at the IRS. You know, things like this third-party office that they want to put together, which we kind of would consider a tax preparer function, so that you've got you could take us out of line and answer more sophisticated questions. Have people on the line that can answer the question, which reduces the amount of contact the practitioners have to have, which reduces the backlog. All of this is, if you reduce contact, you reduce backlog. And we've got a letter of support going out. Funding is a challenge. You know, there was the budget, I think, gave them another $1 billion in resources. But there are going to be challenges to funding because of things like taxpayer information and some of these audits that are in the news. And it really is about resources. It's not just dollars, because as much as we understand they need the resources, it can't all be for enforcement, right? It's got to be for service, and it has to be rational in a way that, again, we think makes them efficient and effective, focused on talent, focused on training, focused on technology. They're way behind. We know that, and we want to support that. And we've actually called for resources in order to address those issues. But there's no doubt it's going to be an uphill battle.
Yeah.
Hey, Lisa, Mark, some questions coming in. one just being related to kind of, ERC, paper return processing?
Still backlogs. I don't have the exact number for ERC. They don't really give that level of detail in the backlog information, but I've heard everything from 4 months to 18 months in terms of how long it's taking. And it seems to kind of go in cycles. It'll pick up for a little bit. I'll hear from our audience that their clients are getting some of their ERC refunds, and then I'll hear that it's come to a stop again. So no good intel on that one.
No, unfortunately, we don't. I will tell you that it is the congressional committees that have oversight are very focused on this. Not only are they hearing from us, but they're hearing from their constituents, and the feedback is overwhelmingly negative about how long things are taking.
Yeah.
Well, Mark, and we've got some of the tax team responding to the questions that are coming in. We always have a group of individuals supporting us here on these town halls, answering the questions. So thanks for those questions. And Mark, we'll have you back at open forum.
Great. Thank you.
Thanks, Mark. So continuing with the IRS, just a real quick item to bring to your attention, a change in how the IRS will be implementing the fingerprinting process for an e-filer who wants to set up to be an e-filer, A real quick note, this does not apply if you're certified or licensed, so attorneys, CPAs, enrolled agents. If you're giving your information on the application around your license, your certification, then you don't have to go through the electronic fingerprint process that they're coming up with. So if this is relevant to you, I just wanted to make sure that you are aware of some upcoming deadlines and holds in that process. And Eric, it's been a while since we've taken a look at how forgiveness on PPP is proceeding. So I thought it'd be good just to check in and see how things are going. And it looks like things are progressing. We've got 90% of all of the loans have been forgiven, representing 94% of the dollar amount. And then we give you the breakout by year. You can see 84% for 2021, 97% for 2020 loans. So making some progress, but you've still got $44 billion worth of PPP loans that have not applied for forgiveness.
Yeah, and we know there's frustration with some of those million applications out there. Maybe there's some frustrations with some of the lenders, but clearly it is working. It is moving forward, and reach out to us if there's anything we can do to help you with some specific technical questions related to some problematic PPP forgiveness application.
Yeah, and this is a look at how the loan forgiveness numbers are looking by loan amount. So you can see that they break it out by loans 50,000 and under all the way up to over 2 million. And the forgiveness ratios are looking really strong. So the lowest is for the 50,000 and under at 98.6% being forgiven, all the way up to 99.5% for those 2 million and over loans. So really strong forgiveness numbers there.
And again, this is just a good opportunity to leverage that trusted advisor relationship. You worked hard on getting these applications in. It's great to kind of leverage the time, with forgiveness to kind of review the state of the business and talk about, there are other financing or other support needs that business may have.
Absolutely. You want to make sure you continue to leverage that deeper relationship you've built. We look at every question that comes in, as Eric has mentioned in the past, and I've seen this one continuing to come up more frequently. So I thought it'd be a good chance to remind you about resources that we have on accounting for PPP, and more specifically around disclosures. So there is an AICPA technical Q&A that will help you look at some of the ways that might be options for the loan accounting. But we've also got 2 great videos that walk through a couple of the more common methods and also give you the sample journal entries for recording a loan and the forgiveness, and also the disclosure information that I think a lot of you might have questions about. So download the slide deck. It's in your resource section of the platform that you've got, and then you'll be able to click on the links for those videos to help with the disclosure questions.
Well, Lisa, now we're going to pivot and bring up Ron Baker. So welcome, Ron. It's great to have you with us. I think most of you know Ron Baker, but let me just tell you a little bit about him. He started his CPA career at KPMG, providing business advisory services in San Francisco. He has written 7 books. One of his mission statement, he's got many mission statements. I'll read one: to once and for all bury the billable hour and timesheet in the profession. He's been talking about value billing for quite a while. And what we're going to do today on July 7th, middle of July, Ron, we're going to stretch, I think, some of our attendees' thinking with your concepts, some of your newer concepts around subscription service strategies and concierge strategies. But first off, just welcome, Ron. It's great to have you with us.
Oh, thank you, Eric. Thank you, Lisa. I'm thrilled to be here.
So, Ron, let's just get right into it. So we've got a lot of bullets on this slide here. We don't have 3 X's or 3 O's in a row. A tic-tac-toe game. So let's just jump into it. And what I ask people to do here is suspend judgment a little bit as you hear some of these concepts. And both Lisa and I are going to ask Ron questions that help in a way that we think will help you understand some of his strategies.
Well, let me start by wheeling back and asking people to think about why they entered this profession in the first place, because I've been doing that a lot lately. And the number one answer I get is to help people. And I don't think you can help people if you have over 1,000 customers. I don't think that makes for deep, meaningful relationships. So I think we need to get back to our roots of why we entered the profession, which is to help people, maybe help businesses as well, help the local economy, those types of issues. And I think the subscription model puts the relationship that we all talk about and, say how important it is, but this puts it at the center of the business model. So it's no longer about monetizing scope of work and transactions. It's a relational business model. And I think that better aligns with why we entered the profession in the first place.
I think that's a perfect way to start the conversation. Sorry, Eric, because you just spoke to me. That is absolutely the reason I entered the profession, that and the angels sing when I get my balance sheet to work out or my cash flow statement to go right the first time. So I think that's a great way to start the conversation. And I think what you're saying is, by using a subscription methodology, you're building the relationship because the client doesn't have to worry about picking up the phone and calling. They feel more comfortable that you've built a relationship where they're not going to get dinged for every piece every time they call you or every time they email you. Is that part of the thinking?
That is definitely part of it, but I think it even goes beyond that, because one of the things we're trying to do with the subscription model is really bake in continuous innovation. Subscription model isn't just about a financial relationship, meaning an annual payment divided by 12. That's not a subscription business model at all. Subscription business model pluses the offering. It goes to the market with the superior offering. And you guys know that I've been all about helping firms with their pricing power. And let's face it, common offerings command common pricing. Uncommon offerings command premium pricing. And one of the ways that we can make our offerings uncommon is we can provide a frictionless customer relationship. We can provide convenience. We can provide peace of mind. We can surface simplicity with our customers. We can save them time. And I think in today's world, if you save and respect the customer's time, you can charge an unbelievable price premium for that. Now, I think that is going to the market with a plus offering, of what Walt Disney would call a plus offering. And that's what commands the premium price. It's just a different mindset, because it's no longer looking at the math of the moment. It's comparing everything to customer lifetime value. With a subscription business model, we're building lifetime annuities that are worth more than it costs to acquire them. So the profit formula is different in subscription, and people have to adjust to that as well.
Well, Ron, in a pre-discussion, you and I talked about, I think, the offer strategy or the strategy around what service you're providing, and to separate that from the subscription, price point. Because one thing I said to you, I know all kinds of firms. I know a firm that is providing client accounting services, outsourced accounting services, and they've got a client, some clients that they bill $15,000 to $20,000 a year, up to $300,000 a year.
Right.
And you came back and you said, Eric, that's more about your offering strategy than the subscription billing strategy. So why don't you just expand on that for the audience?
Yeah, it's a fantastic point, Eric, because this goes into strategy and positioning, and it doesn't even have to do with pricing. Pricing is the last in the chain. You have to figure out your strategy and positioning first. In other words, are you a Ruth Chris? Are you a McDonald's? Or are you a vegan restaurant? That's going to throw off different sweet spots for your customers and different price points. You have to figure that out first. And people love to jump to the pricing first, but pricing's the last in the chain. You have to figure out that strategy, because I believe a firm is defined by the customers it doesn't have and the services it doesn't offer. Focus is really key here. I mean, I hate cliches, but the riches are in the niches. There's a lot of truth to that. And focus is just really powerful. If you look at HP, for example, they have 15,000 SKUs last time I checked. Apple has less than 100. And Apple's one of the most profitable companies on the planet, and also one of the most valuable brands. That's because they're intently focused. Same thing with Coca-Cola and Pepsi. Coke does nothing but beverages. Pepsi's involved in KFC and Taco Bell and other things. And the market penalizes companies for that. It's called diversity tax. It's a complexity tax when you try and be all things to all people. And I think the better focused you are, that makes your pricing easier. That makes it easier to attract the right customers at the right price points. It's much easier to price for Apple than it is for HP.
Well, at least you might want to jump in here. I think that's so important. It's fundamentally important to say, what is your offering strategy? What is your niche? There was a firm that broke into the top 100 this year that only does outsourced accounting services for not-for-profits. It's a two-partner firm, grew 35% last year, 50 million in revenue, and a focus. So that focus, so you kind of get that focus right. Then you move to what is the value point, the price point, Ron, for your subscription service.
Yep, that's exactly right. I have a good friend who is a sole proprietor, and he does nothing but dentists. He can handle a dentist literally from womb to tomb, because he talks to people right in dental school and helps them think about what it takes to build a practice, buy into a practice, expand a practice, add partners to a practice. All those things, he's seen it a million times. Now, I know a lot of us got into public accounting because we're intellectually curious people, and that's wonderful for our intellectual development, But the problem is, when you're trying to establish a business, a viable, long-term growing business, it's really not good to try and be all things to all people. You really do have to build a box around yourself, because if you have no box, you have no strategy. And therefore, you're trying to be Ruth Chris and McDonald's and a vegan restaurant all at the same time. And that's not going to make for a good restaurant.
Ron, I have so many questions. So let's talk about the transformative aspect of the relationship that you're envisioning through the subscription model. Is it digging into client processes around how they pay bills, how they bring on vendors, how they purchase inventory, how they do their sales transactions? Is it broader than that? You mentioned the dentist, helping the dental practice, bringing in new partners. Can you tell me a little bit more about what you're envisioning in this scope of services that can be included in a subscription model?
It's a great question. And I think one of the big things that we can do as a profession that other businesses struggle with is we can provide our customers with deep, meaningful, personalized transformations. In other words, we're capable of moving a customer from where they are, the status quo, to some desired future state where they'd like to be. Now, we don't use this language, Lisa, which is really frustrating, because if we did, I think it would convey a higher value offering to the customer. But things like we provide transformations every day. We're like fish in water. We just don't recognize the water. For instance, we help our customers grow their business. We make their businesses more valuable. We help them retire sooner. We help them build their dream second home. We help them get their kids into college. We help them plan their legacy if you do estate and tax planning work. I mean, what's it worth to Warren Buffett and Mark Zuckerberg to plan their legacy, for when they're gone? We do these things. These are deep, meaningful transformations. And when you provide transformations rather than services, the services are just a means to the transformation. The transformation's the outcome we're trying to achieve. And when you do that, the customer's the product. You change the customer forever. It's like Herodotus said, when you step into you can't step into the same river twice, because not only is the river changed, but you have changed. And if you think about the memorabilia in our lives that's all around our offices, they mark certain transformational events in our life. Our CPA certificate, our college degree, our wedding rings, these are military medals, those types of things. These are deep, meaningful transformations, and we're capable of providing them in a serial manner, one after the other. You don't have to do it all at once, but you can help that customer move from where they are to wherever they want to be. Now, that's going to depend on the firm's expertise and what it offers and all those types of things. But I think it goes much deeper than just solving problems. If all we're doing is solving problems as a profession, we're just reverting our customers back to the status quo. We're not advancing them. I think we need to advance them.
Ron, it's a live show. I'm going to bring you. We got the audience, a lot of live questions coming in. So here, two questions. One is a kind of strategy question. Seems like firms would need to most likely get new clients and have let some, maybe many, go. And then the other one is, okay, what happens in 1 year in an extremely complicated transaction, such as a 1031 exchange? How do you just work that in the subscription model? So talk about client strategy, and then just this really good specific example of an issue that comes up with a client that's in your subscription model.
Right. And it's a great question, because a big question is, how do you pivot to this model? And I really do think, and we can talk about this if you want, but I really do think the best way to pivot to this model is to create a brand new business that will ultimately cannibalize the old model. I just don't think it's very easy for a firm to disrupt itself. The track record on that is very, very poor. But if you set up a new business with a new mentality and a new profit formula and new systems that aren't hampered by the legacy systems, it's much easier to make this transition. But that said, you are going to end up with less clients, but it's going to be at a much higher price point. Remember, I'm all about giving firms pricing power and helping them. I'm not interested in going to the market to command a common price. I'm interested in trying to command a Disney type price or a Lexus type price. I want uncommon prices. The only way to do that is to up our game, to add more value. And we can do that by offering convenience and frictionless customer experience and all of those things. So yes, it's going to be less customers, but it's going to be at a 2, 3, 4, maybe even 5 times price point, because I think people will pay if you save them time and if you just cover them without any hassles, without any friction, for whatever they need. Now, in terms of the one-off projects like a 1031 or a year, we get this question all the time. It's not insoluble. There's many, many ways to handle a one-off pricing project. You could just do an upfront price for that separate project and keep it outside of the subscription. I don't like that option, but I have seen some firms use it. You could ask for a longer term commitment. I also don't like that option, because none of us like to sign up for 2, 3 year contracts with our cellular carriers and then be penalized if we want to leave. So that doesn't fit in with making it easy and frictionless for the customer. I think what you could do is you could increase the starting price of the subscription and decline it over time until it reaches back to your normal price level to account for that other project that you did. Or you could just trust your value and go ahead and do the 1031 work, knowing that if you add immediate value like that of high value, that you're going to keep that customer for life. You keep that customer for 1 year, you have a 90% chance of keeping them for life. And this is what I mean. We have to get away from the math of the moment. Stop thinking about scope of work, stop thinking about services, and start comparing everything to customer lifetime value, because that's what you're building with this model. It's a completely different profit formula. And Lisa, I think I threw in an income statement for the subscription economy, and you can just see it by looking at the income statement. It's just a different model. Look at that income statement on the right-hand side, and you'll notice that it's forward directed. It's not trying to match costs to particular revenue. You can't do that in a subscription model. This is where GAAP really fails us. GAAP has not come to terms with subscription accounting yet, and it's really too bad. But be that as it may, look at what you're building here. You're building annual recurring revenue. And by the way, that's going to be more valuable when you go to sell your practice. It's not going to command just a one-time gross revenue. We're seeing multiples of 5 to 7 to 10. When we talked to John Warlow, who's the author of Built to Sell and the Automatic Customer, and he says subscription businesses command much higher multiples than, fee for service type businesses.
It is a completely different conversation when you're talking about a subscription pricing methodology. I love the words pricing power. And that seems to be something that our profession really struggles with, is owning the value that we're providing to our clients. So I think there's a lot of value in just reminding everyone of the services, the value of the services that we can provide to our clients. So
and I think
great language.
I think that's exactly right, Lisa, because and this is why we need to stop talking about services, because the services are merely a means to an end. The end is the transformation. Think about just for a minute what Starbucks did with a cup of coffee. Because they took this product that we paid 50 cents for a bottomless cup in a diner, and they changed it into an experience, the third way, the third place between your home and the office, where you could go and have a cup of coffee and read a book or paper, talk with friends, whatever. Now, they're still tied to a cup of coffee. They're still tied to a tangible product. Today, they have Starbucks Reserves. Howard Schultz calls it the Willy Wonka of coffee. I don't know if you've ever seen one of these things, but they're kind of amazing. They're 5 stories. Each floor has something different, with the top one, I think, having booze and all that. It's very, very expensive. But he's still tied to an experience. He's still tied to a physical product. We're not. We work with our minds. We can provide serial transformations. We can help that client grow their business, retire sooner, get their kid into college. We can do one after the other, whatever our capabilities are. And that is incredibly valuable. And that way we don't have to talk about services and scope of work. Oh, well, I spent 5 more hours this year, so you have to go to the Department of Paperwork and get a change order. No, all that goes out the window. All that bureaucracy, that non-value added bureaucracy that we engage in, is all gone now for a frictionless experience. And that's what I mean by pricing power.
And Ron, the only thing I'll say is, because you can get trapped, you have to know your offering in your firm strategy though first. So that's
absolutely.
So you can say then you don't have to get caught up in the services discussion, but you fundamentally do, like you said about Apple, you got to know what you're providing.
Right.
So
you got to know what you do and what you don't do. And I think doctors really are good at this.
Right.
I don't go to a GP to get a cardiac surgery, right? He's going to say, no, I'm going to refer you to a cardiac surgeon or an oncologist or some other specialist. I think we need to get better at that as a profession. We need to say no more, because it's a violation of due care to do services that you've never done before. I mean, that's right out of the AICPA principles.
Well said. It's middle of July, so we're putting quotes up here on our town hall slide. So I'll let this individual is all about self-improvement. I'll let you clear this.
Yeah, I love this. Werner Erhard, who was an interesting guy. Can't say I agreed with everything he said, but I do like this line: all transformation is linguistic. If we want to change our culture, we need to change our conversations. We talk a lot about culture and how do you change a culture? Well, culture is just what we believe. It's just what we do without thinking. It's how to be good, right? And one of the big things that can change a culture is the language we use. So I kind of put together a table that you can go to that shows you the language that we tend to use that we tended to use under hourly billing, the language that we tried to change to a value pricing, and now that we're in a subscription world, the language I think we're going to need, like things like transformation, rather than providing, say, a value conversation or a scope of work, and things like insurance, which is, part of what the subscription is providing is insurance to the customer. And I mean that with an E, not a I. Insurance meaning whatever you need that we're capable of doing, you're covered. Don't worry about it. You're in good hands. And boy, I'll tell you, customers will pay a big premium just to be taken care of and just to have their time saved.
So a lot of the language on here jumped out at me, and thank you for talking about the insurance word there. But what about emotional capacity? So the time capacity under hourly billing makes total sense, but then you've got adaptive capacity moving into emotional capacity.
Yeah. And
Quickly,
what I
can you
mean,
tell me what that means?
yeah, emotional capacity, I think, is just a phenomenal term. And this goes back to the idea of why did we enter the profession? To help people. Well, the average physician in the United States, general physician, has 3,200 patients, which is why you spend a total of 5 to 7 minutes with them, and they have 60 office visits a day. You can't live your mission of helping people if you're spending 5 minutes with 3,200 patients in a year. You can't do it. I mean, I don't care what you do. I don't care how efficient you are, what kind of technology. That's not why these people entered the profession. And so emotional capacity means, sometimes you might have a phone call in the morning with a customer, and for 1 hour, maybe 2 hours, and you're drained for the rest of the day. You have to get up and take a walk or go ride a bike or do something that just breaks your mind up because you've just spent enormous emotional capacity. This is what makes knowledge work different from, machine work or blue collar work, because we're working with our minds. And we just can't turn them on and off like a machine. I mean, we get burnt out. We have to get recharged. We need time to think and plan and relax and do all those things. And that's what I mean by emotional capacity. Are you present for that customer to engage into deep conversations, deep transformative conversations, and really make an impact on their life? You can't do that if you have too many customers.
Well, Ron, I mean, this has been a fascinating discussion. I just for the listeners here, Ron has, supported over during his career, 200,000 plus professionals. He's been in the top 100. He hosts a great podcast with Ed Kless. It's called The Soul of Enterprise, Business and the Knowledge Economy. We'll include information about that in our follow-up town hall newsletter. And Ron's also going to be at Digital CPA this year, talking about some of these concepts. So, Ron, I want you to stay on with us for the open forum, but Lisa and I really appreciated this discussion with you.
Oh, thank you for having me. Awesome. Thank you.
So, related to kind of some of the things that we just were talking about is us trying to find out more information about the client advisory services area, client accounting services area, a benchmarking survey. Lisa, one thing you and I have talked about is that this is a emerging category compared to the tax and audit lines. And one thing that we know from this benchmarking survey is that the billing per professional is not equal to those other lines, and that's because your firms are still getting their arms around it. I mean, it is a very strategic area. It's a must-have service now, post-pandemic. So we're just trying to gather data. Lisa, anything you want to add there?
Just that we do encourage you to participate. If you do participate, you're going to get advanced results from once the survey is completed. It's going to close in August, so time is of the essence. But we're really working to build community insight and the peer-to-peer relationships that you get through these types of surveys, the great insights that you're going to get to help you run your practice more effectively.
So let's bring Mark back up. As Mark's coming, we can drop this. Ron, I'm just going to ask one question as Lisa and I go to the Q&A. But one thing that when we had you last on the town hall, we talked about this move to a results-oriented kind of workforce. I mean, we're still, so you're talking to firms, they're in the hybrid mode. mean, how do you see that? The management of work, the management of outputs. Give us some of your thinking there.
Yeah, it's a great question. As you probably do, we see a hybrid. Not many firms have taken up a pure results only work environment, which I think actually makes the most sense. But obviously, each firm's going to have to make their own decision. I mean, you look at firms like Apple and Google and Elon Musk. They want their team in there, period, because they think that's where innovation strikes up. And in those surreptitious hallway encounters and things like that. So I think firms are going to have to grapple with this, but there's no doubt in my mind that they're going to have to learn to be flexible and have to start judging people on results and not inputs, not hours and how long they sit in a cubicle, but at the actual output of their work.
Thanks. So maybe this is both to Lisa and Ron, and I agree with that. I mean, it's all about results, and kind of it's not always FaceTime by any means. But it is interesting. You got some of the leading companies demanding FaceTime at the same time. Lisa, engagement. So what we just talked about, people saying engagement letters and independence. So your thoughts on engagement letters for the subscription model and managing the independence question.
I don't have a sample engagement letter for a subscription model, but I always encourage practitioners to reach out to their professional liability carrier anytime they're going to enter into a new line of service or a new service agreement. So reach out to your provider for those sample engagement letters. They're an amazing resource and can really help you get off on the right foot.
And I would just add on the independence issue, I have heard that if you do audits, subscription model might violate the independence of that audit. And if that's the case, then in my mind, that's a feature, not a bug. What does that tell you? It tells you the relationship is everything in this model.
Lisa, is some question thanks, Ron, is some question that you're seeing you want us to tackle here?
There are a lot of questions, y'all. Let's see. I know that there were some questions earlier on, and Eric, you alluded to the fact that some clients are having trouble getting their PPP forgiveness applications processed through their banks. I would just suggest that you continue to reach out on a regular basis. There were questions about if you've been asked to start making payments because your deferment period is up, will you get those payments back once your loan is forgiven? And the answer is yes, including the interest that you've paid. So that money is not gone. You just got to get the processing and the forgiveness going.
Well, why don't, Lisa, next, why don't we move to the concluding slides here. Thanks, Mark, for today. Thank you, Ron. Let's talk about what's coming up later this month. And I think one thing, and Lisa, you can stay with me here. Lisa can stay with me, and we can move to these final slides here. Here's the summary slide of what we covered today. Stay with us. We don't always do this. We need to do this more often. We are out there with you in social media. Someone retweeting a quote from Lisa and Nancy McClellan. Thank you for your regular attendance. Here's the most recent town halls, which you can access. And next time, Lisa and I will be together in the New York studio with Barry Melanson. So we're looking forward to being all three of us together to conduct this town hall. I think, Lisa, maybe we'll put a resource on some of the top questions, like the question you just mentioned, related to PPP. But I look forward to Lisa being with you in New York.
Thank you.
So here's the next town hall, July 21st. Barry will be with us. Thanks for your time today. We appreciate you giving you the technical updates as well as the latest from DC, but also having this deeper dive discussion with Ron Baker. So hope you have a good couple of weeks, and we look forward to seeing you on July 21st. Thank you.
Thank you for your participation. You can now subscribe to the AICPA Town Hall series on your favorite podcast platform, as well as watch archives on YouTube and AICPA TV. Tune in for live broadcasts, Thursdays at 3 p.m. Eastern Time.